As we get into the market, we need to talk about the SP 500 and the Nasdaq 100. We do a lot of the charting primarily with the Nasdaq, but I believe today SPY gave you an overall viewpoint of what really is happening here. If we look at where you've been moving on the day, this is essentially your open right here, and this is your trading range. For example, we go back over the last 2 days, you can see we've had a little bit more than that, obviously, but I set almost double the range here, and then again right here as well to start the week off as well, going back and forth. So we had a lot more movement to start this week than we did today. We also had Fed minutes, and we got a better look into exactly what they were saying at the end of September. So I think we have a lot of answers being established here, and then tomorrow we have the big boy news that will definitely get some volatility kicking in here. So there's a lot of things we need to talk about before we let you go into some of those stock plays as well. I'm going to go over all the stock plays I have right now in this video, but before I get into that, to ask you to consider doing two things: liking and subscribing. Every single day I make these videos for you, so you are prepared on the market. Let's get to it. So what we're going to do is actually hop in here really quick, and I want to show you something really quick. It's going to be volume. This is first thing I want to show you on the day. So I told you, as you consolidate before we get to these big breakouts, typically volume really pinches, it slows down, and today was a great example. You're probably going to end the day around 66, 67 after, post market, but right now that's what I'm anticipating. You're sitting at 64.89 at market close right now. So this is where I'm at. This is what I'm looking at, and today it had left me with some questions. However, I'm still bearish. And before we go any further as well, I do want to show you the positions I have, and I'm going to be really transparent. So I got some Amazon puts earlier from November 18th, the 110s. That's what I'm sitting in right now, and that's my only position. I'm going to be transparently clear. That's all I got. Okay, so as we jump back in here and we look at some of these plays, and I just want to do this so I don't forget. Looking at Nasdaq, let's look at where we're at before we go any further. Let's look exactly where we are. Let's just clean this up a little bit so you can see a little really clear. We're sitting down at this bottom range, and we know we basically have support until about 10.65. All in this area, we expect a little bit of a bounce, a little bit of a reaction, but ultimately, what do we know? If you get below 10.6, we anticipate blood. Right? That's the overall census here on the channel. That's what we expect. You get below 10.6, we expect a lot of blood down to 10,000 flat. Boom. Okay. Now, I decided to go more short into something like Amazon. I had November 18th, have a little bit more time on that as well. And I think max risk there is around 15, possibly 20% if things come out crazy tomorrow. You have CPI as well, and we had PPI come out today also. PPI came out negative, but the real big mover that we're all watching for is CPI, because generally that brings the most volatility here on the market. So as you look here, I just want to prepare people, because if CPI comes out really terrible, along with the minutes that were released on the Fed meeting, this could be the green light you need to get that downturn. Okay, looking at SPY again, it's worth mentioning we're really just one drop away from hitting our key target, which is right back here, your pre-COVID highs. And we could easily get below this, so I want to make that really known that this is not a hard bottom and the bottom of the overall drop, but this has been my target for a few weeks now, and really more months, but that's what we're looking at here. So as you look in here and as you are watching, I think you have to respect the level in which we're trading right now, and then you also have to respect in how you're contracting at this level as well. So you see, end of the day, we basically end the day near lows, if you will, and now that's where you're at. So tomorrow, CPI is going to be very big, right at market. I believe it's actually an hour before market open, 7:30 Central, 8:30 Eastern. So make sure that's on your watch list. Next up, VIX. I'm sorry, I typed that totally wrong. VIX. This is probably the biggest red flag on the market right now for me. So you are trending on VIX near $34, $35. Now, I just want to zoom out really quick to the daily time frame. and this is much different than any other move up that we've had here. So we can see that if we really look at VIX here, let's really just take a quick look at what's happening and how you're moving. Let's just clean everything off so you can see. This is the first time you've just trended up. Okay, you had your first trend back here back in April, all the way through about May, which into June led the biggest crash that we really had, the first big drop. And now you're getting that again, but it looks a lot stronger than you did back here. Back here, you had a little bit more up and down. This is just steady upside. And in reality, when you come up and test this level, you've had pretty quick rejections back towards that downside, right? Pretty quick. You get hit up and you come right back down, up and down, up and down, up and down. Here, you're bouncing pretty quick, and then you come back and you're just sitting here on the day. So this has me extremely interested with what's happening with VIX. And we know as VIX climbs, we see more downside. So if you can start breaking, and it looks like it wants to start making a new high on the year, I'd keep your eyes open, because you start getting above this, it's going to get nasty, nasty, nasty. So these are all things you have to be watching out for. But there's a lot of really big red flags across the market right now, okay? So next, junk bonds, some of these other indicators we're looking at, you're just chilling out lows, nothing too big there. Your yields, overall, your inversion. Again, I want to go over some of this stuff first before I can get into the juicy stuff near the end. You know, you're still just chopping up here where you're at right now. So nothing too big here. But all eyes seem to be in effect and waiting heavily on CPI. And as we get into cheddar flow, we can also see that as well. So looking at SPY, we're just going to look really quick at SPY, and I'm going to show you the biggest premiums. And you also saw a lot of readjusting, which I went over in the live session today. If you're not aware, I'm going to be doing a lot of lives here on the channel as well. So make sure you have the notifications turned on, because those will not be visible after I go live. So after I shut down the live, the stream, whatever it may be, unless you're a member on the channel, you won't have access to those, but you have access while I am live and to ask questions and everything like that. Also, so you know, the new Twitter, I will be doing giveaways nonstop for Discord. Free giveaways almost every single day for this month. So make sure you are following. The link is down below. I'm sorry, we had to make a new account. It is what it is. So that's where we're at now. So as you're looking at this, it has me a little bit concerned with where we are, especially with how you saw all these repositionings going into the Fed minutes. And when we went over those Fed minutes live, we saw a lot more of those questions that we have as far as the wage pricing spiral. We have a lot of question marks with energy. We saw the overall Fed turn to a hawkish outlook. They expect more downside. They expect downside on the GDP growth. They expect inflation to continue going up. They see red flags across the board. I'll have the Fed minutes linked down below if you want to go over them for yourself. I don't want to cover that here in this video. That's why I did it live. So as we look at this again, these are all just across the board things you have to be worried about. But ultimately, tomorrow, just so you want to know, if you want to look at this, go to investing.com. All you got to do, I recommend, I have this on my phone as well, so you can see all of this. But it's super easy. They have an app. You can set alerts as well. Just go to your news, economic calendar, so you can get the exact time for tomorrow. You're going to want to see what happens with CPI. If it comes out bad, just like PPI did, I anticipate some gnarly downside. Personal opinion, what I see happening if CPI comes out piss poor like it kind of has been, okay? So I want to make that really clear. Right now, you're already seeing some downside here, but I don't even want to talk about after hours, because you've seen after hour dips and then bouncing right back into this. So I want to go over some stocks I'm liking, things I'm preparing for on the downside, and the best kind of setups there is right now. So that's what we're going to do right now. Not too much futures covering right now, more around the stock side. We've gone over futures. We've gone over where we're at, big supports, everything like that. So I don't want to, just repeat the same thing over and over to you guys. I would like to show you some opportunities and plays out there right now. So step one, let's go over to Amazon. Probably one of my favorite plays, obviously, if I have it right now. Now, associated with Amazon, let's talk about where you're at. So on the day, what made me very interested, I've been interested in Amazon for a while, and I've been waiting for another entry opportunity because I do want to catch this downside. Okay. So you're seeing clear-cut rejection near this monthly level. We had rejected here. You came back up. You hit it again here. Got rejected again. We love to see this. If you can break and hold below 112, I anticipate some really nice downside. But the big break is going to be about the 110 level. So really, you're trying to hold this for as long as possible to get that big break down here. If you can break below these key levels down here, specifically 110, I do anticipate you will come back and test 52-week lows, which you have quite a bit of range to get to, down at 101 to 103. That's where I'm anticipating Amazon to come down to with this break. I think the chart's extremely weak. You're consolidating at these lows, and I think you're getting ready to get a break as well. CPI could be, again, the little push that we need to get the big break, hopefully to turn a profit here. Again, I'm targeting November 18th because I like to have more time on my contracts, especially in the current trading environment, because I believe you're not getting enough follow through. I just don't want to have all this crazy risk associated with my trades right now. Next up, talk about Tesla. Now, Tesla, Ultimately, I talked about my trade that I had yesterday here, going to the 5-minute. You basically hit targets today. You have a little bit more downside at about 206 to maybe 09, but keep this on your radar as well. I still like them. It's a little bit rough around the edges here, but you are getting rejected from this level right here. And this is what I'd be interested in watching for. So as you're getting rejected here, 219, 218, I have to anticipate more downside coming back down to 52-week lows, getting a hard test around 208, 209. Still like it. I believe you're just settling in here. Again, if futures get hit tomorrow, everything's going to get hurt, but I'm just trying to show you the plays I like the most. And you're going to notice a going trend here is that they're all some of the bigger cap, bigger names here. Now, in Discord, we were talking a lot about Meta. I believe Jay took a scalp on this today. They ended up getting out of it. People made 20, 30% give or take, but you never got the big break you wanted. Essentially, you're sitting at 52-week lows right now. I talked about this one 2 days ago as well. You were consolidating at 134, previous 52-week lows, and then you tanked, right? So now you're sitting at basically lows again. So you're trying to see, are you going to get a break below this level? If you break and hold below 127 on like the 15, 30-minute chart, that's going to be some confirmation to see if you actually can get follow through here. Because once you start getting the follow through, I am targeting about down to 123. So I do believe we have some downside, and I'll mark this out for you guys as well. So that's what we want to be looking for. I'll have this updated throughout the coming weeks as well. But what would I be watching for to get confirmation, right? You want to see a break, retest, push. That's what you want. That's a best case scenario to get that downside opportunity. Next up, let's talk about Apple very quickly. Now, Apple has been definitely one of my favorite plays as well down here. Also, I mentioned them yesterday, and you continue to make lower lows and lower highs. If you go to the 4-hour chart, you have a lot of room down towards your 52-week lows as well. So I still like this play. I think you have room all the way down to around 129, 130, and you're sitting right there at the monthly right now. If you break below and hold below the monthly, I do expect a lot of downside here as well. I think no one is necessarily safe, and these are some of the plays I think that still can get slapped and have a lot of risk associated with them, especially towards the long side. So I still like the downside across the board, and I still think you have great setups right now. The biggest sector getting hit the most is semiconductors. So if you're looking at NVIDIA, looking at these other plays, one of the main levels we're watching right now in Discord is the, I believe, 107 level. So you have almost like $6 of downside, give or take. Keep them on your radar, but overall right now, I still really love them. And you're holding below the daily level. It's showing significant weakness across the board compared to most stocks as well, especially since you came and hold above that daily open. So these are things you look for in the market when you're looking for weakness. And I believe NVIDIA and AMD specifically have a lot of that weakness right now, specifically with what's happening in China. So you're having not only inflation concerns with what's happening to our economy, but now you're having trade war issues as well with China and these other countries as well, to where now they're getting blacklisted with specific technical advantages that NVIDIA has and cannot share with these countries. So these are different areas you have to be watching for. And again, it's about finding weakness in the market and exposing it and taking advantage of that weakness. And I believe NVIDIA is giving you that opportunity. So definitely keep them on your watch list. But basically, this is what I'm primarily looking at. And I'm going to wrap it up with oil because I know a lot of people have questions about oil. So going into oil, I was extremely bullish on them last week. I had another trade going into this week. I ended up cutting it on Monday. But since then, you basically broke through a key level, and now you're pushing back down to our major support. So I want to see if you're going to bounce here on the barrel around $85 to $86. If you bounce out of this zone, I will become a bull once again, and I'll probably start trading Oxy and Exxon. But until oil and the barrel gets out of this, you have to be a little bit concerned and you have to be cautious because you are down in this demand zone. Going into those stocks, Exxon, I still love it. I still think it's strong. I believe you're trying to find support at previous highs here, but you're so close to these, local highs. And the question is can you start bouncing, getting back to those levels? Because if you start bouncing and getting back above 100 on Exxon, I do believe you will test and make new highs. Going into Oxy, I still love what's happening here as well. You're a little bit further from those highs, but I still believe you're working your way back up. You got dangerously close on the last push, and I think you're definitely working your way to get pushed back to those levels. You do have a daily gap, which I mentioned down here as well. I'm curious if that gets filled, but locally right now you are finding support and buyers are showing up locally. So these are things you have to look for, and I still like them, but right now I'm being cautious, especially to the upside. Why? because I have to recognize where there is risk. If the whole market is tanking, then that does not mean I want to just jump into calls, even on oil, which I think is, bullish, right? I still want to conserve myself, notice the risk, and prepare myself for potential downside across the board. Because I always say, if indexes are tanking, it's less and less likely that your stock is going to go up. I don't even care if it's a hedge against inflation. It's a less and less opportunity. And right now, oil is dropping with the stock market. So you have to acknowledge what's happening and how we're moving right now. And that's ultimately what I'm looking for and what I'm trading on the market. I'll see you guys tomorrow.